Hey there, welcome back to the Finance Zoom channel. Get ready for an intriguing exploration into investment insights and the automotive industry. In today's video, I will delve into the thoughts of financial icons Warren Buffett and Charlie Munger regarding Tesla. Join me as I uncover the reasons behind their unique take on the electric car powerhouse.
All alternatives have a future, that they are the future over time, but you can't change the world, the base of the world. I mean, you've got 260 million vehicles on the road, or whatever number it is in the United States, and I don't know how many around the world. And
Tesla last year reduced its prices in China twice. BYD increased its prices. We're direct competitors. We're so much ahead of BYD. I mean, BYD is so much ahead of Tesla in China. It's like it's almost ridiculous.
Tesla, the electric car manufacturer, has been making headlines for its rapid growth and innovation in the automotive industry. The company's advancements in electric vehicle technology and its ambitious expansion plans have captured the attention of investors and enthusiasts alike. As I talk about these two legends, Warren Buffett's take on Tesla is grounded in the vastness of the automotive industry. He highlights the challenge of transitioning an existing fleet of 260 million vehicles to new technologies, underscoring the deep-rooted nature of transportation systems. Meanwhile, Charlie Munger's insights bring market dynamics into play. Tesla's pricing strategies in China, which lowered prices while BYD increased them, reveal a competitive reality. Munger emphasizes BYD's dominance in the Chinese market, questioning Tesla's perceived superiority in certain contexts. Collectively, these viewpoints emphasize the complexities and challenges Tesla faces, from the enormity of altering established transportation norms to the nuances of competing in a diverse global market. In a recent Tesla earnings call, Elon Musk made a statement that resonates with the whole world given the changing business landscape. "I think moats are lame. What matters is the pace of innovation." This observation underscores the evolving dynamics of competitiveness, where innovation and technology play pivotal roles. With these insights in focus, let's start with Warren Buffett. Given the changing dynamics and intensifying rivalry, does Elon's viewpoint carry significance according to his perspective?
Elon writes.
Well, Warren. Elon says a conventional moat is quaint, and that's true of a puddle of water. And he says that the best moat would be to have a big competitive position, and that is also right. No, it's ridiculous. Warren does not intend to build an actual moat. Even though they're quaint.
yeah, there's certainly a great number of businesses. This has always been true, but it does seem like it. The pace is.
In recent times, we've seen some strengths become vulnerable to challenges, but others are still strong. It's important to keep improving and defending these strengths. Elon Musk's ideas might change things, but certain strong points remain. We won't underestimate his projects, like his candy venture, but some businesses, like making things efficiently and Geico, maintain resilience. Think about Apple entering the electric car world, maybe even by buying Tesla. Warren Buffett talks about how old American cars are on average, showing that big changes in how we power vehicles can't happen quickly. He believes that while the world is moving towards using less carbon, it takes time for major changes. Shifting to electric cars, Charlie Munger recognizes Tesla's importance as a big change, even though it won't happen overnight. He knows electric cars are important, but he thinks they might only make up about a third of new cars by 2030, so traditional cars will still be around.
Electric tops or something like that worldwide. I mean, you can't change this mass of transportation. You can't change it in a year. It is changing. It should change. But in terms of just the math of replacing, if we said we're going to junk all the cars we have, well, you know, the economy would stop. I mean, we can't produce it. We couldn't replace it.
Additionally, when Buffett said, "I mean, you can't change this mass of transportation. You can't change it here," his words ring true. He means that while change is happening, replacing all the existing vehicles is a huge challenge. It shows how innovation, practicality, and economics are all interconnected. Just think about how the economy would be affected if we got rid of all current cars. It's a clear example of this transformation's size. Turning to Tesla, Buffett's thoughts make sense. Even though Tesla is making a big impact under Elon Musk, his doubts about electric cars becoming widespread quickly make me think. He says electric cars might only make up around a third of new cars by 2030, which is surprising considering how much we're hearing about them. It's interesting how a seasoned investor's ideas add a new perspective to the ongoing conversation about electric cars.
Success and it's not easy, you know. It's probably easier to develop a new car than to compete with stickers. But some products have terrific moats. You know, probably Elmer's glue does. You know, WD-40. I mean, there's just certain things that you are not much inclined to be dissatisfied with and seek. And I would say that, incidentally, that the iPhone, has a terrific moat. I mean, people that have an iPhone, or maybe have some other phone, but they want to continue with the product that they've got. They want the new version. It's just easier for them. They've learned how to do everything, and their life's built around it.
Next up, let's explore how Warren Buffett addresses these issues. Elon Musk's declaration of Tesla's entry into the insurance realm raises queries about potential challenges for established insurers. Furthermore, as Tesla embraces online sales and traditional dealerships adapt to reduce property holdings driven by evolving consumer behaviors, what potential effects could this have on Berkshire Hathaway Automotive?
It is important to have data on how people drive, how hard they brake, how much they swerve, all kinds of things. So I don't doubt the value of the data, but I don't think that the auto companies will have any advantage to that. I don't think they'll make money in the insurance business. Using the internet to shop for cars is like using the internet for shopping for everything. It's another competitor, and there's no question that people will look for better ways. Now, the gross margin on new cars is about 6% or thereabouts. So there's not lots of room in the game, but that will be a method, and that will sell some cars, and that there are, it's.
However, Warren Buffett doesn't view it as a force that will dismantle auto dealerships that excel in customer care and service. He believes dealerships that genuinely prioritize customer satisfaction and understand their needs will remain resilient. While it's not an overwhelming threat, the presence of manufacturers entering the insurance market and shifting car sales online will persist and impact the industry. Warren Buffett's way of looking at things is marked by doubt about Tesla's value. He talks about how tough it is to do well in the car business and how much money it needs. He also points out how many car companies have had problems. He talks about how hard it is to keep doing well and how much money it takes to run this business. Now let's talk about what Charlie Munger thinks. He adds more ideas about Tesla. Munger doesn't think Tesla will keep being the best because more companies are starting to make electric cars. He's unsure about Tesla's value and believes its stock price is based on guesses. Munger says the car business is tricky and problems could change what Tesla does. His ideas make us think more about what Tesla's future could be like. Shifting gears, let's address another query. Berkshire Hathaway recently sold some of its ownership to companies like BYD and Taiwan Semiconductor. This raises a question. Did they do it for money reasons, or is there something more going on, like the relationship between the United States and China? This question makes us wonder if these choices were only about money or if other things, like what Charlie Munger said, influenced them.
Have anything to do with the relations between the United States and China, or was it for purely economic reasons?
Well, BYD's talking about 50 times earnings. That is a very high price. On the other hand, they're likely to increase their auto sales by another 50% this year. So we sold part of ours, by the way, years ago. Not years, but about a year ago at a much higher price than it's selling for now. And no, we're not a mini Berkshire. We're not going to have a big correlation between us and what Berkshire does. And you can understand why some people will sell Berkshire's BYD stock at 50 times earnings. At the current price of BYD stock, little BYD is worth more than the entire Mercedes Corporation. Market capitalization. So it's not a cheap stock. On the other hand, it's a very remarkable company. And by the way, I want to tell people the great contribution I made to the success of BYD. We got into it through Li Lu, and there was a little company that knocked off the Japanese cell phones. And the chairman, who's kind of a genius, said, I want to buy a bankrupt little crappy auto plant and go into the auto business from dead scratch when he's making cell phones, little tiny nothing company. And both Li Lu and I tried to talk him out of it. We said, please don't do this.
Charlie Munger's smart ideas about how we value stocks, especially those trading at 50 times their earnings, make us think. It's interesting to think about companies like BYD, which have grown a lot even though their price compared to their earnings is high. Munger's way of looking at this shows us something unique, and he also talked about them selling their stocks at a higher price, which adds more to the story. Remember, our way of investing might not be exactly the same as that of a big company like Berkshire Hathaway. As Munger wisely says, a company's stock price can show how important it is in the market, even if it looks like it's worth a lot. Munger's advice to not rush into decisions reminds us to be careful with our investments. See why Munger prefers to invest in BYD over Tesla. You'll find out why he made this choice.
Well, that's easy. Tesla last year reduced its prices in China twice. BYD increased its prices. We're direct competitors. We're so much ahead of BYD. BYD is so much ahead of Tesla in China. It's like it's almost ridiculous. And if you look at BYD, which most people have never heard of,
Charlie Munger's insights help us understand why he might not be so sure about Tesla. He looked at how Tesla's prices changed in China. They went down several times. At the same time, BYD, a company like Tesla, raised its prices. This tells us something about how the market works. Munger also talked about how BYD is doing better than Tesla in China. BYD has a huge car-making plant, like a big part of Manhattan. This shows us how big they are and how much they're growing. All of this helps us see why Munger thinks BYD is important. As we listen to their thoughts and they come together, we see a detailed picture they've made. It's like a complete puzzle that helps us look at Tesla differently. This puzzle is based on their many years of being smart with investments. Buffett and Munger tell us that looking at companies for the long term is very important. They don't just look at what's popular right now. They want to find companies that will do well for a long time. They believe that great companies stand out because they have strong qualities that make them better than others and are wise with their finances. This is how they approach investing. Their words help us understand why Warren Buffett and Charlie Munger might be cautious about Tesla. They are experts in investing, and their perspective looks at the present and the future, giving us a complete picture. As you've journeyed through Warren Buffett's and Charlie Munger's insights on why they might bet against Tesla, you've uncovered a wealth of knowledge. Now it's your turn to join the conversation. How do these investment legends' thoughts resonate with you? Share your ideas in the comments, sparking discussions that dive deep into the intricate world of finance and their cautious stance on Tesla. Your perspective matters as we explore this ever-changing landscape together. If this exploration has sparked your curiosity, don't forget to like, share with fellow enthusiasts, and stay tuned for more enlightening content. Until next time, keep your curiosity alive.